Hey, good morning, everyone. Just wanted to touch base, send out a recording here this morning. Tim's gone this week on vacation with his family, celebrating his 20th anniversary, and we're glad he gets to do that and celebrate that milestone. We're going to jump in here on this chart here. It's corn. It's December corn of 21 contract on a weekly basis. I want to jump in here and just kind of put a perspective on that drop that we've had and where we started from. So this is all last summer of 2020, our drop down into the summer at the bottom here at 357 on the December 21 contract. I'm just going to throw a Fibonacci retracement here up to the top. And as you can see, it bounced off the 50% retracement. We went up $2.80, we dropped $1.40, and we reversed from there. Now let's go ahead and jump to the regular chart of December 21 corn. I think what's really interesting is this drop took almost 3 weeks of trading till we hit the bottom of that 50% retracement. We reversed that 75 cents or 85 cents in 4 trading days. So we've really gone with exuberance back up towards this level. Now yesterday it traded to the limit of 40 cents, and that happened to be, again, I'm going to put the retracement on here, 62% retracement of that drop. So it's kind of interesting that it went straight to it, to the limit, and today on the overnight we failed at that level, but again, we're still up a little bit here this morning. We're wanting to see it break yesterday's high of 85 pretty soon. Main levels we're going to probably look at that maybe we want to look at putting some protection on is below this cloud. You guys have seen this cloud in this 42, 43 range. It's back about Friday's low. I'll show you a quick short-term chart on the 240. We do have some short-term gaps down in here. As traders, we don't like to see those. We're afraid of them getting filled if you're onto the long side here. So, below those clouds, the 42, 43 range, we may want to look at protecting that. I wouldn't be surprised to see us bounce down a little bit before we go higher to break that 85 level. Let's go back to our chart here. Also, in the news coming out, Ag Rule came out with Brazil's estimate for Brazil. They lowered theirs to 90.9 million metric tons. USDA is still at 102. We'll see in the next report if they continue to drop that number. Also, there was some small reports of freeze damage in the northern corn belt. Also, our dollar is still weak, so we're still getting some. As last month we had a lot of new crop corn sales, and we're also seeing in the 5 to 10 day drier outlook in the corn belt. So, we're looking up at this point. Obviously, there's levels we'll want to try and protect here, but we're not looking to do that quite yet. The crop progress report out yesterday had 76% good to excellent on the corn. Last year it started out at 74, so still in the good range here. Not unexpected with the weather we had, where we could get the crop in good, and we've gotten a few rains. Moving on to soybeans. What's interesting about soybeans, this is November chart here, is they've really hung on better than wheat or corn as far as the price levels are concerned. As you can see on these you see these lines right here. This is from the bottom of the November contract. We haven't even gotten close to retracing 38% of the whole move in the November soybean contract. So even if we do get a big break, we might want to look at protecting this 1320 level a little bit, below these lows, 1310. But we're really not breaking this market, even a break down into, the low 12s. Just that would be a natural move in an up move, just on a counter trend move. So we're still looking up. We haven't traded any weather yet. We bought the acres, we ran it up, bought acres, had a little bit of a break in the corn and soybeans, and now we're going to start trading weather. So these swings could get wild. If we get dry, it's going to go up. If we start seeing continual rains, we might see another break. So just be watchful, mindful of that. We'll try to keep you updated. Wheat, we're going to switch over to the wheat here. I want to show you, if I can find my wheat to corn ratio here. This is the July wheat contract versus the corn July wheat contract. As you can see, July wheat is 42 cents cheaper than July corn on the board. And if you take into your basis levels on that, especially in the feeding area of the country, wheat's at least $1 cheaper than corn as far as feeding it is. So there's a report out that in the 2021 crop year, we fed more wheat than we have in the last 10 years. Fed more than we actually used for food use, and they're expecting that again in 21-22. So that's going to underpin wheat price. So wheat's just going to follow corn. If corn goes up, wheat's going to go up. So we're not looking for the wheat to break unless corn does. So be mindful of the corn market for all intents and purposes. Obviously, the wheat around here looks really good. We've got plenty of moisture. The good to excellent rating went up 1% this last week. The only thing that's hurt in the wheat market is the spring wheat. Up in the northern territories, they are dry. Their ratings have gone down, and probably look to continue that until they can get some rains in the northern areas. That's about all I have today. Please do not hesitate to give us a call if you have any questions. We would be happy to talk to you. I'll get Phil's and I number on the email since Tim's gone. If you have any questions, if you're looking to make any moves, we'd sure be happy to talk to you about that. Again, there's significant risk in trading futures and options. Be mindful of the levels you're trading at, and don't trade more than you can lose. Have a great week, and talk to you soon.